Hey guys, what's up? My name is Desmond Demore, and welcome once again to the inside of my screen where we'll be discussing everything candlesticks. Okay, so now I've been getting lots of requests on Telegram, on Twitter, and on Instagram. Some of my students, some of the my fellow traders out there asking me, what do I do when like how do I restore a blown account, sort of, or an almost blown account? Do you get me? Blown in the sense that you could have like a particular starting capital, and then the next thing you lose about 70% to 80% of it. I'm talking about when you have like $1,000 starting capital, and then you lose 800, and then you have just $200 left to battle your way up. How do I go about it? Now, one thing I need you guys to understand is this. um in when it comes to forex trading, okay, you need to have realistic goals. Okay, that is the first thing. Because I see a lot of people. I mean, I can't really blame you guys for coming into this industry, for coming into this business and looking at crazy returns because of the kind of lifestyle that has been sold to you guys. If you check my previous YouTube video, I spoke about this same thing. I said, so many people are coming into the business because of the lifestyle that has been sold to them on the internet. Okay, I mean no disrespect, or I'm not trying to downplay every other person's efforts in trying to bring you guys up in the best way possible. However, I think you guys could use some bit of honesty. Okay, some bit of honesty, because you need to understand that your expectations are those are the things killing you. Okay, those are the things drawing you back because of the kind of things you expect to get from the market. Okay, so first things first, you want to reduce your expectation as much as possible. You want to keep it as realistic as possible. Okay, if you're coming in here with $1,000, you need to understand that you're not looking at making 100% in a week. Okay, although it's possible, but it's not sustainable. Okay, and you need to also understand that it is very, very difficult to apply proper risk management when you have a small starting capital. Okay, it's one thing you having the knowledge, that is actually knowing how to trade, and then it's another thing entirely having the right capital to start. Okay, so the bigger the capital, the better, because that is where you can actually properly manage risk. However, it is similarly it is also advisable that you start small. Okay, start small and build your way up, because one thing I have realized is that if you're not able to manage a small account, okay, you're not actually going to be able to manage a bigger account, because it's just a change in percentage. Okay, just a change in percentage. Everything is the same setup, is the same 20 pips SL or 30 pips SL to catch 100 or to get 50. However, your returns differ because of the account size. I could actually take a trade, and then it could be a 1 to 3 risk to reward ratio, which is I could be risking 1% of my account to get 3%. So 1% of my $20,000 account is different from 1% of your $1,000 account. Okay, so that's something that you need to understand sincerely. So 1% of your $1,000 is just $10. Okay, and 1% of my own, okay, is literally $200. So you need to understand that these things differ according to your account sizes. Okay, so the first thing that you need to understand is this: have have an appropriate starting capital. Don't come here with $500 looking to make $7,000 in a week. Okay, it is outrageous, because as at the time you're trying to rule out setbacks. Okay, setbacks are inevitable when it comes to life, especially in trading. You will definitely encounter setbacks here and there. However, risk management is what keeps us going. Do you get me? You could be taking 2 wins in a row, then after those 2 wins, you have like one loss, and then the one loss wipes off everything that you've made plus your starting capital, which is not a good idea at all. Okay, so now let me just dive straight into the reason for this video. But before I do that, please kindly subscribe, okay, and like, so this video gets viral and then helps every other person that needs it out there. So I'm gonna give you 5 seconds to do that. In five, four, in three, in two, and one. Okay, guys, thank you so much for the like and subscribe. So now let's just get in. So ideally, what you need to understand is this. If you've suffered a major hit, I'm talking about trading capital. If you've suffered a major hit in your account, you need to also understand that you cannot keep applying the same risk that you used to apply when that account was at break even. Now, what do I mean? Say for instance, now you have a starting capital. Okay, say for instance now you have a starting capital of about $1,000, and then you've been risking 30%, or probably, because in fact for you to even take an account of $1,000 down to $200 or $100, you must have been risking crazily. I'm talking 30%, 40%. Okay, so it's outrageous. Okay, you guys know me. My standard risk percentage is 3% per trade. I don't go more than that. Okay, I risk 3% per trade. So for you to be having $1,000, a whole $1,000 reduced all the way down to $200, that means you must have been moving crazy there. So the first thing you need to understand is that you cannot apply the same risk, okay, that you use when the account was at break even. Irrespective of the account size, it could be 10,000, 200,000. As long as you have lost and then you're currently in drawdown, you cannot keep applying the same risk. So say for instance now you have been risking $300. That's about 30% of your $1,000 initial, and then you got blown all the way down to $200. Say for instance now you got blown all the way down to $200, and then you still look at making the exact same. You keep risking the. You need to reduce it. Okay, you need to reduce it totally. In fact, I listen, guys. The smaller your account size, the bigger risk, okay, that you tend to take, because the returns are not usually tangible. Okay, say for instance now you're trying to risk 1% of $1,000. Okay, even if you make 3% in a trade, that's still it's not tangible enough. Okay, so ideally you want to be risking good amount of or good percentage of the capital, which is in no doubt ideal anyway, because of the starting capital. But I usually advise that people come with a good capital, so you reduce your risk exposure, so you last longer. Okay, so now say for instance now you've been able to blow you've successfully blown 1,000 to 200. Now you need to reduce your risk to at least, or rather at most, okay, I take it back, to at most 10% of the 200 bucks left. Okay, you cannot keep risking the exact same 30% every single time. You take a hit, come back, and no, 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 no. At that, because what happens is, once you take a hit and then you get into drawdown, and then you reach the same percentage again and then you lose, it starts to mess with you psychologically. Already taking a hit, I mean, listen, man, losing what, 800 bucks, okay, from $1,000. That is a big psychological problem to cope with already, because and that is where my Telegram community comes in. You need to check the link in this description. Once you're done with the video, click it. It brings you to my Telegram channel where we discuss things like this. We talk about these things extensively. Okay, you need to understand that there is a realistic approach to the market. Okay, and that's called top down analysis. But that's just by the way. Okay, so the first thing you need to do is understand that you have to reduce your risk exposure. Okay, you cannot keep taking the exact same lot size they use for $1,000 for $200. No, okay, except you're gambling. Okay, and which is there is a very very thin line between trading and gambling, and that's something that most people do not understand. So you need to reduce your risk substantially, and then also you need to understand that you have to make room for setbacks. Okay, now one of the ways to deal with setbacks effectively is to actually expect it. In the sense that I'm not saying you should go out there and do something wrong intentionally, but expect setbacks. Now, when you expect it to come, it doesn't. It has zero to no effect on you psychologically, because you're actually expecting it. Now you're giving room, okay, to be wrong. Now, if you come to the market and then you don't give yourself enough room to be wrong, it's gonna play on you psychologically, and the effect is usually very very crazy. Guys, you need to understand, man. I have been through. See, everything I talk to you about here on my YouTube channel is basically my life experience while trading. Okay, so you need to understand. I'm speaking from a place of I have experience, guys. Okay, I have been through a lot, so I'm trying to save you. So you need to understand that you need to be as realistic as possible. Lower your expectations. Okay, no, nobody's a robot here, man. I'm not a robot. If you go over my previous videos, you can tell that I've made some good money here and there. Then there are days I also hit break even. Yes, I also hit break even. Sometimes I take losses. Okay, so you need to give room. You need to give room, and then also one of the things that keeps you going, okay, in the long run is actually risk management, money management. If you're able to manage your exposure, okay, you're able to reduce your exposure to setbacks. It's gonna help you last long. I mean, it's not success in trading is not linear. Okay, you take two steps forward, take a step back, take three steps forward, take a step back. Okay, so you win more, you win two, you lose one, you win three, you lose one, you win four, sometimes you win three at once, you win five at once, you lose three at once. Okay, so it's not linear. So what helps you to stay here longer is risk management. So the first thing you need to understand is lower your expectations, and then come with a good starting capital. Okay, it's good for you to start with a small capital, and then build your way up for experience sake. Just give me a sec, guys. Just give me a sec. Yeah, so it's good for you to build the feeling, because one thing you don't also want to do is double trade for long. That's paper trading for long. It's not I mean it's good for practice, but it's not something you should do for too long. Okay, so you need to get into the real thing as quick as possible. So yeah, the first thing, like I said, you need to lower your expectation, and number two, you need to come in here with a good starting capital. Okay, and if you do not have access to a good starting capital after series of back testing, and after series of trading, and then you understand what you're doing, okay, then you can go ahead and apply for prop firms. For all these we have several prop firms willing to sponsor you, okay, willing to invest with you if you're skillful and consistent enough. So that is also some way that you can actually deal with capital problems. Okay, you can go for hedge fund if you actually know what you're doing. Okay, you can go for all these proprietary firms. Okay, they have lots of money for you to trade with. Okay, so that is so the first thing I spoke about was having realistic goals, coming here with good capital, risk management. Okay, and you need to understand that getting that account back, getting that $200 account back to break even is not going to happen in 3 days or in a week. Okay, you have to be patient with yourself, because even the midst of you growing that account back to break even, you're going to still encounter you chances of you encountering losses along the way is actually it's actually high. Okay, you have higher chances of encountering a few losses here and there, but with proper risk management and having a daily drawdown limit and a daily target, a daily profit target, keeps you going. Okay, so listen, guys, listen. There is a more realistic way to approach the market, because for you to upgrade the account from $1,000 all the way down to 200, from $10,000 all the way down to what 9992. Okay, you need to understand that there are several things you're not doing right. Okay, there are several things you're not doing right, and that's why you need to click the link in this description to bring you to my Telegram community, where we speak about the top-down analysis and then the actual proper way to trade. Okay, I also teach people how to trade, but should in case you do not have the money at hand, you can literally just be in my Telegram community, where I send free setups out. Like, I send signals out daily, at least 3 to 4 times a week. Okay, out for free. I also have the inner circle there for people that actually want to subscribe for my signals. But I'm saying, okay, that all these things I just have said, you need to understand that you need to come to this market and be realistic with yourself. Okay, be honest with yourself. You know your skill set, you know your skill level, you know your experience level, you know what you can do, you know what you cannot do. Okay, so you also need to understand that the outcome of every trade is completely random. Okay, so you cannot afford to bet a farm on a single position. Okay, you need to understand risk management. It's not the skill set that keeps us going. Okay, it is risk management, being able to avoid certain unnecessary trades. Okay, because I see a lot of people taking trades that are super too early or super too late. So you need to know the right time, and that's where the top-down analysis approach comes into place. You need to be a part of my Telegram community, and I speak about this thing extensively, totally for free. And then also you can enroll for my mentorship. I teach you how to trade the, in the best realistic way possible. Okay, so right about now, guys, go ahead and subscribe to my channel and then leave a like so this video gets recommended and then goes viral. Please join my Telegram community. Let me save you the stress of all of this, all these things you're going through. Some of it, see, let me be honest with you guys, man. Some of the losses that we encounter, on day-to-day basis can be totally avoidable. Okay, can be totally avoided. I repeat, some of the stress that we put ourselves through can be avoided, can actually be avoided. So just go ahead and join my Telegram community. Let me impact you guys. Let me help you. Okay, once again, guys, my name is Desmond More, and like I said, if you have problems with capital, you can go to any platform of your choice. I personally recommend my Forex funds, FTMO, okay, and E8. Okay, my forex funds, FTMO, E8. Okay, those three programs I can certainly vouch for because I've been with them for a while and I've used them and I've seen people make lots of money from them. Okay, so you also can actually give it a try. Then also do not forget what we spoke about. Join the community for better understanding. Okay, guys, thank you so much for sticking to the end of this video. I love you guys and I'll see you guys in the next one. Bye bye for now.